Mhm.
All right, go for it, bro.
All right. Yeah. All right. All right.
Y'all see me? Y'all see my screen?
Yep.
Yep.
All right. All right, cool. So I want I want to start here, right here on the 1 hour today. I had told Winston last week, Friday, I said, man, I want like when we get on the Zoom and some stuff I wanted to share with y'all. So I'm gonna start on the 1 hour, right? And I over the past few weeks, I was talking to y'all about liquidity, right? You got internal liquidity, you got external liquidity, right? So you got your internal liquidity, which is your um your gaps, your order blocks, your volume imbalances, things of that nature. And then you got your external liquidity, which are your swings, your swing highs and your swing lows, right? So from a 1 hour perspective, let me move my chart over. So from a 1 hour perspective, just looking at this chart, you looking at, okay, well, you got swing high up here, you got swing low here, you got another low down here, right? So let me mark it off for y'all so I could be clear, so we could be on the same page. Got a swing here, swing high here, and we're gonna leave this one for for shits and giggles because it's already in our range already. All right, so what the market does, it seeks liquidity, whether it's external or internal, right? So when you sweep external liquidity, 9 times out of 10, you're gonna bring it to internal liquidity, right? So for instance, from let me draw a line. So from this range here to here, let's just focus on this range right here. So this will be your swing high in this range, right? Y'all see that? Oh, I'm talking to myself.
Yeah, we see it.
All right, cool. So this is your swing high. Now this is the 1 hour chart. So this is your swing high, right? So you see, as you can see in this range, the market is trading in the range. You could call it consolidation. You could call it a range. You could call it whatever you feel, whatever makes you comfortable, right? So this is your swing high. This is your low, right? So if the market wants to continue to be bullish, the low, this low gonna be protected, right? So as you can see with this very bullish candle here, we took out this high, right? So this will be external liquidity because it's a swing. This is a swing too, but we just focusing on these groups of candles right here on the 1 hour. But this is also liquidity here, right? So as you can see, the market took out this high, left this. And we're gonna talk about that in a second. Left this here, right? So external liquidity, swings. All right. So we gapped up, took the liquidity, traded back into the gap, right? So the gap is internal liquidity, right?
Yes.
So
Yes, sir.
we traded back into this gap. Now, what makes this gap different from a lot of other gaps that you may see is this gap has an order block at the bottom of it. So when gaps have an order block at the bottom of it like this being a bullish gap, the probability of your trade, if you take this trade to the upside, the probability of you winning this trade is high, very high, right? So in other terms, you trade back into this gap, you get long, boom, you take it. So now, let me break it down a little further. You took your external liquidity from the two highs, you took it internal, right? So if we take external to internal, we gotta take internal to what? External, right? So we left this high, we left these highs, and we left this high. So when you have a displacement gap like such, when you have a displacement gap and the order block at the bottom of it, like this is a high probability trade to the upside. Now, do you take this trade on the 1 hour? That's up to you. You find it on a 5 minute, you could do that too. But we took external, back internal, took internal, external. So basically all we did was we got y'all out the market. We took y'all orders, right? So these people were bearish. They selling. I'm putting my stop loss up here, put my stop loss here. The market's selling. That's what they thinking. The market about to sell, right? So we said, all right, fuck, I'm gonna show you. This candle, we take y'all out, right? We take y'all out, so then we sell. So if you're looking at it like, damn, if you was watching this trade happen, this candle with the wick at the bottom of it, it was a very aggressive candle to the downside. So those people that were selling in the market, they probably try to get back in and say, oh shit, we about to sell. They just try to get me out, we about to sell. Nah, bro. Like if you don't pay attention to what the market is showing you, you're gonna get fucking cooked. You're gonna get cooked every time. Because when the market creates a gap like this, it's for a reason. It's for a reason. And when we traded back into this gap, and I remember seeing this, I remember sitting on my computer trading and shit. I was like, yeah, I gotta take this. But when the market gaps up or gaps down, but in this instance, we're talking about the upside. When it gaps up like this, it's for a reason, right? So hindsight being 2020, I'm not gonna lie to y'all. So when this gap happened, I took this, right? I took this. I think I made like $300 because it came back and stopped me out because I thought it was gonna run because this was whatever. Whatever. I'm not gonna get into that. So after I got stopped out and I'm watching the trade, I'm like, all right, so we selling. So where we going? So I'm looking at the order block and I'm watching how we responded to the order block, and I can show y'all in a 5 minute how we responded to the order block. I'm like, oh shit, we about to run. But that's hindsight. But for right now, I want to show y'all, like, for instance, when this happens on a high time frame, whether not for me, I call a high time frame the 1 hour to 4 hour, because we day trade. So on a high time frame like this, these are your high probability trades. Do these trades happen on the smaller time frames, like with me and Winston be trading like the 5 and the 10? Yeah, they do. But if it don't align with a 1 hour bias, the probability of that trade going bananas like this one did is low. Is it? Can you get paid? Yeah, you get paid for sure. Because we're not trying to be in the market all day. We're just trying to make a little money and go, enjoy our day. But at the end of the day, these displacement gaps like this, when we displace above the swing high, so we just come get y'all out and say, fuck y'all. Y'all shouldn't even been in here anyway. Come get y'all out the market. We got these sellers out. So we take their liquidity, bring it back internal, hit this order block, and go with our move. So with that being said, this is the daily chart. So Friday, this is a displacement gap, a daily displacement gap. I'll show you. Let me draw it out. Go from here to there. That's a displacement gap. Why is it a displacement gap? Because we displaced above the swing high. So this is the swing high. You can see this is a swing high too, but this is the range we talk. This is the consolidation right here. Displace, swing high, right? So while displacing, right, we tested this joint, kept going, right? So if you're looking at this, you're like, all right, so you could say, well, we consolidating at the top of the gap. Okay, that's fine. From here to here, you can say that's a consolidation. This is your high of your consolidation. This is your low, right? So then Thursday, we create a bullish candle. We close above this candle, this red candle. So now this red candle is considered an order block, right? So Friday, what we do? We come down to this order block and get the fuck. This is a bullish order block. So I'm gonna show it to you on the 5-minute.
So when you say auto block, you just saying the one candle that shows you what the big move happened?
So look, so when you have a candle of the opposite color before a big move happens in the opposite direction. So this is a red candle, then you have a big move to the upside. So when this happens, that means the institutions are about to get in the market. So you ever notice how every time we have a big move, there's a candle of the opposite color looming? That means that the big people sold so they could buy. So the order block is the candle of the opposite, the last candle of the opposite color before a big move in the opposite direction happens, right? So this is your daily. This is a daily order block, this candle right here. It didn't become an order block till Thursday. So we closed above it Thursday. Friday, we came back and tested the order block and left. That makes sense?
Yeah, I'm following you. I'm
All
just
right,
driving my phone.
All right, cool. So look, even if you're looking at this gap, this displacement gap that started the move, if you look down here, you see this candle? It's an order block. This is where the big people play at, bro. This is the institutions. This is how they manipulate the market. That's how they play. Order block. This is here, right here. So we was to trade back into this gap and fill this gap. I'll get long again from here. I'm taking it until the market show me that it's willing to sell. And I mean like sell. I ain't talking about 20, 30 points. I'm talking about 100, 120 points, something like that to the market. Show me that, I'm buying. And of course, looking left, we don't have no data because we at a high now. So shit, if the market won't keep going up, I'm gonna ride with you. So speaking of this trade,
Hey, hey, Mike, right quick. Not to throw. I'm only talking to Supreme right now because they always talk about us two. And the same reason Mike taking that trade to the upside, you see how we closed outside that gap? So that let me know we didn't want to fill it. And then it tested the top of that gap. And now I want to buy also. So it'd be different reasons how we look at the chart, but it's telling, we have all these signals and it's telling us the same thing. We go back and look at it, look at how it closed back outside the gap after it closed in there. And now I'm like, all right, well, we must want to buy and go test this high again.
So,
go ahead, Mike.
So look, so this is a trade I'm gonna break down today. The order block. I'm following. The order block that we hit Friday. I'm about to break this trade down, and this is how I saw it on the 5-minute. All right. So this is your daily order block. All right. So, like the past few Zooms, I've been telling y'all. So whenever we take out liquidity and reverse, and we create a gap in the opposite direction, take it. So, for instance, liquidity. So liquidity could be internal, external. So your internal liquidity was the daily order block. It's internal. right? So we hit the order block, my blue line right here. Now, these candles coming to the order block, they was a little aggressive, right? So you like, this bitch could keep selling. I don't know what's going on. Blase, blase, blah. Cool. Just wait. Just hit the order block, reverse, boom, created that gap. I got the gap drawn out already. Created that gap, right? Market trades back into the gap. You get long. Now, this is a daily objective. So can you sit in this trade all day? You could if you got your big boy pants on, you want to sit in the trade all day, you can. Or, you could take your money and run. But we hit a daily order block. It was bullish. So the sentiment for Friday should have been, I'm trading upside. Right? Cool. So market gives you an entry gap, right? So you like, man, I ain't too sure. Because we got these gaps that we created to the downside. Cool. I respect it. So let me tell you about these gaps. Most of the gaps, I'm not gonna say most of the gaps. Some of the gaps that the market creates in the wake of or before a move in the opposite direction happens is noise. These gaps are noise. Did we respect the gap? Yeah, we did. But did we get a big reaction from it? No, we didn't. But you don't see that. You only see it in real time. Or you can look at it now and say, oh, yeah, we didn't get a big reaction from it. Because the market wanted to go with the daily objective, and the daily objective was the bullish order block that we had just hit. Where it happened like 4:30 in the morning. Something like that. So market creates a gap. You take this gap to the upside. So now once you enter this gap, you're looking for a price target to get out, right? Because of course, we talk that shit about sitting in the trade all day, but 9 times out of 10, we're not. So you enter your trade here at 59.1, you're looking for a place to get out. So you're looking for swing highs to get out at. That's your price objective, right? So you could get out here, this high, that was inside the London range, or you could take it all the way to the top of the London range. Right? Did you have to sit in this trade for a while? Yeah, you had to sit in the trade for a while. So let me explain to you the trade I took Friday, because I didn't get in here. I watched it. I didn't get in here. This is what I did, because I went back to sleep. So I saw how the market closed above this gap. I said, okay, well, we closed above this gap. So 9 times out of 10, we're going to probably trade through this gap. So while doing so, I'm going to draw it out for y'all, bro. We created this small gap here. This is where I entered the market, here. And my price target was here. And I took my money and I ran. But this is the point I'm trying to drive home to y'all. The daily. So this is a high time frame reason to get bullish, right? The daily. You can't get no higher than that if you're a day trader, right? Bullish order block hit here. So if everybody riding with you uptown, we shouldn't be going across the canal. We're going uptown. So you shouldn't have a selling bias on this day. You should be trying to get bullish with the rest of the market. Do you have a price target? You should. If you get in, when you still have data to look at to the left, yeah, you got a price target. But after we got data, no more data to look at to the left, then you winging it, taking it to the upside. You winging it. Me personally, if I don't have anything to the left to look at, I can't really gauge where to get out of trade at. So now that we in new territory again, set a new high. So now I just wait till we trade back into the range, see what kind of setups that it creates, trading back into the range. Then I take it either up or down. But the market's still telling me up. So let's walk through this again, bro. Because I want y'all to be able to understand this. This is your daily, this blue line is the daily order block. This is the 5-minute time frame. This, we hit the order block, trade it back above it, creating a gap. Not only did we create a gap, we got your immediate rebalance right here, Winston. At the bottom of this move to hit the order block, got your immediate rebalance. You got a gap here, then you got an immediate gap that close on top of this gap. Use this gap as support. Cool. You can enter here, or you can wait till the market trades back into the gap to take this interior liquidity external. Internal liquidity, external. So what's external? Swing highs. Boom, boom. This is the 5-minute time frame. So you take your internal liquidity, external. Here, take this internal liquidity, external. It's really that simple. But it's just, you have to train your eye to be able to see these things in real time. Because if you don't, it's gonna miss. You're gonna miss it. These gaps that it creates is for a reason.
Hey, Mike.
Yes, ma'am.
So that order block line,
Uh-huh.
when the market goes up from that order block, when it returns back to that order block, are we doing the same process? Like, does it return back to the order block and then we sell up from there? Or you buy up from there?
Yeah, so look, this is the order block. So let me walk you through the trade again. So from 1 a.m. to 4 a.m., that's the London kill zone, right? So once you have your London kill zone closed, now we still trade in London, but this is just the kill zone. So we trade down to the order block, this blue line, right? So I put it on my 5-minute chart just to see how it will respond to it. Instead of me having to go back and forth from the daily to the 5-minute to the 1 hour, I just put, okay, this is the daily order block. I want to see how the market responds to it. Once we hit it, it gave me the response that I was looking for. So you hit the order block, you close beneath it, but you immediately reverse. And when you reverse, you create a gap. Your internal liquidity. Boom. Let me get in this swimming pool. You can take it, you take this. You can take it here if you want to. If you need a little bit more information, you can wait. But I see, you know, I see what you're doing, but I need a little bit more information. Cause that's what I did. I waited. I was like, you know what? It's too early in the morning for me to be trading. You know, I don't know what you're doing. I know you just hit a daily order block. I know you did, but I'm gonna just wait. I want you to show me first. So that's what I did. I went back to sleep for a little while, and he said, "All right, I'm showing you." So I was like, "All right, get long from here, take it to the swing high, and get out the way." You know, but when you have a high time frame, PDRA, like a daily order block or a daily displacement gap or a daily or a 4-hour, whatever is the highest time frame that you trade on or the trade, you know, that you use for direction. If it's bullish, you want a bullish response to that said reason that I want to buy. But it's, for instance, if we would have traded straight through this order block and kept, I'm like, we selling. Like, market and topped out, we selling. But it gave me a bullish response. So when you get a response like this, when it creates a gap, you into this gap, right? And your stop loss, I know, because we never talk about stop losses. I'm gonna start talking about the stop loss. So you put your stop loss below this low right here. All right. So you're risking you enter here, you're risking about $125, $150 trading one contract or so. You see what I'm saying? So you're risking 150 to make, I don't know, geez, I don't know, 1,000. So this is a good trade. Yeah. When you have a daily objective like we did here. So you have it. So let's walk through it again because I want to make sure we understand what's going on. Thursday, Market trades above said candle. Now, before Thursday, this candle is not an order block. It's just another red candle. We still consolidating.
Mhm.
Still consolidating on top of this gap, this displacement gap, right? Thursday, we close above this candle. This candle now becomes an order block. So market trades back to said order block and goes off. So now your price target could have been this swing high, this daily high right here. This comes with growth in time and patience. This could have been your price target 51.23. I didn't stay until 51.23. I just wanted my money and I left. And I never came back. This is my first time looking at the chart since Friday. So order block hit. External liquidity taken. We're going higher. So I guess the next question is, do we take this external liquidity internal? I'm sure we will. I'm sure we will. But since we have no data to the left to look at, I'm just going to wait for the market to show me that it wants to do that. I can't make it do it. It's going to wait. So until then, I'm buying with everybody else. I'm being greedy with everybody else. Y'all want to be greedy? I'm riding with y'all. So from a 5-minute perspective.
Hey, Mike, can you please go back to the daily chart? Could you not use a previous order block like that? What candle is that?
This one?
Going left.
This candle
What
right
date is it? It say Friday. It say the 29F05, February. The 29th February and then February 5th. There's a red candle. You see what keep going right there. Could you not use that previous order block for direction, or just don't, because we don't have that? We had high times. We had all-time high. Just don't worry about it.
So yeah, you could have used this. I mean, the market traded through it. But see, this is a good example of how order blocks work as well. So the market traded through this order block, this candle. The market traded through it, but it still respected it. It couldn't close back above it, but it still respected it. The next candle traded into it, and we left. But this example is not as clear and precise as you would like it to be. This is more nuance. This is more nuanced than like really technical. You see what I'm saying? So it's more like, do the market want to go up? This is the nuance, like of we traded into the order block, but we got up, but we still didn't close above the order block. But you know what I'm saying? It's like you got to know exactly what to look for on a smaller time frame to take trades like this.
So in this instance, like being new to the order block and like getting your eyes fixed on it, you want something that's cleaner, like that's cleaner, like your example you're using now, or not now, but like your main example, you want something like that, right?
Yeah. So what you really want, you want an order block. You want an order block like such.
Yeah, clean one. That's what I mean when I say clean. Yeah.
Yeah. So let's do this. So even looking at this, right? I'm gonna show you. This, what will we consider this? This box right here. Consolidation, right?
Yeah.
All right. Well, let me get this together. So we consider this consolidation. We could even go from here. So you got this is the top of your consolidation. This is the bottom of your consolidation. Right? So with the market, this is what the market does. And if you don't believe me, just go back test it. This is what the market does. Consolidation. Right? Consolidation, expansion, retracement. No, I'm lying. I'm sorry, guys. Consolidation, expansion, consolidation, expansion. But in these consolidations, we leave clues and hints to what we're trying to do, right? So we consolidate and we leave this consolidation and we leave this big old beautiful order block here. That means when we come back, you can either get long from here. Now, you got to pay attention to how the market responds to it when we get there on a smaller time frame, right? So if the market continues to trade through it, then the market is telling you, okay, now we're delivering price to the opposite side of the market now. But until then, and like I said, until the market shows me that it's willing to sell, and I'm talking about sell, I'm talking about like 150 points sell, 200 points, I'm buying every opportunity that I get. So consolidation, expansion. Got another consolidation, expansion. So every time the market comes back down to the consolidation, it uses that consolidation to go high.
To expand.
To expand.
And so that's just saying, like, if it goes below that, like you said, if it's trading through it, then you're led to believe that that direction is going to change.
Yes, sir.
Correct.
So,
Okay.
but here's the gotcha. This is a displacement gap right here. So a displacement gap plus an order block, that's bullish for me. That's bullish. You got your displacement, you got your order block. Let's roll. Now, when this trade does present itself, you gonna have some data to look at to the left to be able to gauge when to get in this trade, when to get out this trade. Should I take this trade? You know what I'm saying? You're gonna have more data to the left. But until then, the market is still flying. It's still flying. So even I'm gonna bring your attention back to the 1 hour. Let me move this line. Then I'm gonna stop talking. My mouth getting dry. But when you have a displacement gap, this is the 1 hour that has an order block in the bottom of it. Order block right here. That's your order block. This is your gap. I'm gonna draw the gap out right quick so everybody can see it. That's your gap, right? When you have a displacement gap with an order block at the bottom of it, this is a high probability trade. You write it in your notes, take a picture. That is a high probability trade to the upside. You get into that trade, go ahead, I'm listening.
No, I want you to finish before I ask what I'm talking.
So if you enter this trade, whether you find a smaller time frame, you might not want to enter it on the 1 hour. You might not, you go find your entry, your reason to buy on a smaller time frame, the 5 minute. Okay, cool. You enter that. So you get into this trade. Now you're thinking, what's my price target? So we've already taken these highs out. This high is gone. This high is gone. So what's the next target? If I get in here at 50.71 from an hour perspective, we got to be coming here. Let me draw a line for you. We got to be coming here. That's it. So if you would have took this trade to this swing high, that's it. I don't know how else to drill it home. It's liquidity. That's all the market is looking for. It's liquidity. You got internal liquidity, gaps, external liquidity, swing highs, a displacement gap, plus an order block, double liquidity. I'm taking it to the upside.
And so on the 5, it was that same thing with that gap. Well, that's the question on the 5.
Let's go to the
at
5.
The bottom of that gap when you go into, if you move left, right there would that still be considered, like, is that an indicator that you have that gap, and at the bottom that first candle would that be an order block?
What, this?
Yeah, would that be an indicator for you to, like, okay, even more so, like, if you're just looking at it on a 5, like, if if that's what your time is, and you see that happen, it's like the same thing on the hour as just showed. We have
Okay,
that.
so you're speaking specifically on this is Friday. This is Friday's price action,
Okay.
right? So
Yeah.
this is when we hit the daily order block. So when you want to watch how the market responds to, excuse me, you want to watch how the market responds to your reason to buy. It's like, man, I want to buy this order block, right? So the market, on a 5 minute time frame, or if you go lower to the 3 minute or the 2 minute, that's your preference. That's fine.
Right.
But if you go to if you look at how the market responded to the order block, you're like, this is the response I was looking for.
Got
This
you.
is what I wanted right here. I want you to hit it, create
It's
me a
springboard.
gap to the
Okay.
upside, and I'm taking it.
Okay.
You know what I'm saying? You want, because you got to keep in mind that this is a daily reason that I'm buying this. So even though I might not get the explosive move off of it, like I would like I just want that bit to ping and go. That way I ain't got to worry about it. I'm done. I made my money. But you're not gonna always get that kind of response.
Right.
But if you get this gap, oh yeah, that's love, because now you hit the order block, you create a gap to the upside. I enter the gap. Now, if the market decides to trade lower and take me and stop me out this trade, now I'm sitting on the sideline until you show me what you're trying to do. Because now I'm confused. Because you created a gap to the upside, you hit the order block, you created a gap, you gave me entry, and then you traded up. Then all of a sudden you started trading in the opposite direction. So now you stop me out. So now I have to be patient now and wait for you to show me exactly what you're trying to do, because now you're confusing me. Because we hit the order block, gave me my indication of buy, and now we're heading to the upside. Now, I'd be lying if I didn't say that I didn't get in here. I saw it. I was up. I was looking at it, and I went back to sleep because I was tired. Just being honest. Then when the market came, when I saw this, and I was like, "Oh, it's a 1 hour," because this is the 1 hour. Let me show you that. So this is the gap. This is the wait, what time? 7 this Friday right here. So it was this gap right here that I was like, the market gonna trade straight through this. So it was down here where I think I believe I got into this trade on a 5 minute, because it created a small gap. Yep, this gap right here. So this is where I got long. This is where I got long.
Mike, how do you sit in your trades? Like,
how I sit in my trades?
Yeah, like how you, and not be like, ooh, let me get out.
After you make a couple of $100. So for me, I'm not gonna say it's an ego thing, but it's more so I work too hard at this shit to walk away with $20. Bitch, you gonna pay me. You gonna pay me. That's just it. Like and the more you do it, the more you see it, the more confident you're gonna be in it. You're like, yeah, I know this is where you're going. You know what I'm saying? It might take you a little while to get that, but I know what you're doing. Like you're not gonna. I'm not stupid. Like, because it's just the market. It's highly manipulative. And if you don't pay attention to your keys, whether your keys be gaps, swing, whatever you pay attention to, if you don't pay attention to it, you could be easily fooled. Easily fooled, because the market gonna manipulate you. Because the market wants your money. I want your money. I want to take your money from you. I don't want you to make money with me. I'm gonna take it from you. So that being said, the daily order block, give you entry, gap, boom. We got another gap down here. I'm taking that. Market open at 8:30, exploded to the upside, boom, there you go. Take me out. Take me out the game, boss. That's it. So you walk away from the market at about 9:15, and you're done for the rest of the day. So, now you go sit in McDonald's and eat citizen breakfast and call it a day, or go to Piccadilly, whatever you want to do. But at the end of the day, the market is just looking for liquidity. That's it. On a 1 hour time frame, liquidity. You got swing highs, you got swing lows, you got you got internal liquidity, which are your gaps. That's all the market is in search of. Because this is like gaps are like, remember I used to say gaps are like a magnet for price. So
Yeah.
once a gap is created, it's a magnet for price to return back to it. And especially if you have more than one reason to return to it. Like, okay, this is a displacement gap to the upside, but you also have an order block. So
Mhm.
order blocks are formed in itself of internal liquidity. Displacement gaps are informed by itself internal liquidity. So if you put both of those together in one trade, I mean, with our powers combined,
Yeah.
we are Captain Planet. You
Right.
know what I'm saying?
Gotcha.
So
That's just more confirmation for you. Even
is more
show, even more.
confirmation.
Gotcha. Okay.
That's it. So when you pay attention to those keys and you watching it, you're like, okay, because I'm gonna be honest with you, like Mike, to like a year ago, a year and a half ago, I'm watching this trade. I'm watching how aggressive this 1 hour candle is trading to the downside. I'm trying to find a reason to sell it. I'm trying to sell this shit. This shit about to sell. We about to sell. We about to sell. But then once I gathered more information about the market and learned it, I'm like, I'm gonna buy this bitch right here. And then it leave you a nice wick, a nice beautiful wick, a nice wick, and then it trades higher. Then it trades higher, and it trades higher, and trades higher. So,
So looking at those two selling candles at the top, okay, let me see if I can get my words together. Would it come back to fill the gap? Because they ain't been filled, right?
Phil, what gap? This gap? This gap that is in right now?
Mm-hmm.
Yeah, it should fill it. So, I mean, I want to share this with y'all too. I don't want to confuse you, but see these gaps that we created.
Mm-hmm.
So let me draw this out. What's this?
Because if we don't have no data, because we all time, like what I'm trying to do is trying to find some sort of pattern or something to help me, like run my hand along the wall because I can't see because we too high. We don't have no data. So
I got you.
what can I cling to
look,
so I'm just not stumbling in the dark?
Answer this question. All right. So you see this blue line I just put on the chart?
Yes.
What's this right here? What's this called? A what?
A doji?
No, but what is it called? A swing?
A swing high.
All right. So what did we do with this candle? This is a displacement gap, right?
Yes.
All right. Now, once you take this trade and you make $1,000, send me 50.
Okay.
All right. So look, this is your displacement gap. This was your swing high. You got a displacement gap above it, right?
Yep.
So if we're not having this conversation right now, so the market was to trade back into this gap, would you take it to the upside?
Yes.
You would? Why would you?
Because we took out that swing high. That's the gap. It bounced off that gap. It's been going up. Like, I'm confused.
Yeah, so look, so this is just, all right, you don't have to be confused, I'm explaining to you. So this is a displacement gap, right? So just like this one was a displacement gap that we spoke of, right? The only thing with this one is you don't have an order block at the bottom of this gap, or do you?
No.
Do you? I don't know. You tell me. No.
No, there's no order block.
There's no order block, right?
Right.
Okay, so what would you call this candle? It's another candle, right? So you wouldn't be interested in buying this candle if the market was to trade back into this gap? I'm not trying to confuse you. I'm just trying to get you to talk yourself through it. So the market was to trade back into this gap, this displacement, right? Let me move this line out the way. My chart's starting to look like wind chart. You trade back into this gap. This is a displacement gap. The reason why it's called a displacement gap because we displace above the swing high.
Okay.
Okay. So if I'm looking at this, if you're just looking at it like, all right, I'm looking for a trade for next week, where can I get long or where is there a high probability chance for me to be profitable, right?
Mhm.
Okay, cool. Swing high, taken out with the gap. So here's your gap, right? So the market is, let's just say the market trades back into this gap.
Mhm.
I'm taking this trade. If Michael is taking this trade, I'm taking this trade from here,
Yeah.
right?
Mhm.
If I lose this trade, that's fine. If we
Mhm.
close below this gap, okay, well, we're going lower. Cool. But I'm gonna stand 10 toes on taking this trade because
Mhm.
I've seen where displacement gaps are liquidity. This is liquidity. This was
Okay.
liquidity. It's a reason why the market creates these displacement gaps. Because if you see how the market creates swing highs, and when it takes the swing high out, if the market doesn't take this high out in reverse, it's going to continue. And when it
Yeah.
continues, it creates a fucking gap. I hate the curse. Sometimes I just get real passionate. It creates a gap, right? So now when we trade back into this gap, I'm looking to get long.
Right.
You see what I'm saying?
Okay.
Now, all gaps are not, I'm gonna repeat this, all gaps are not created equal. They are not. Displacement gaps are the gaps that you want to trade
Okay. Okay.
each and every time. The gap, so we take your swing high out with a gap, okay, trade back into this gap, I'm taking you. Wherever you want, where we going? McDonald's, Burger King, Chick-fil-A, whatever. We going.
Mhm.
You see what I'm saying?
Right.
So now the market does create other gaps. And those gaps, I like to call them noise. I'm gonna show you a gap. There's this noise. This gap right here.
Mhm.
Noise. Did we respect it? Yeah, but it didn't bring us nowhere.
Mhm.
We created it, we respected it, bounced off it, didn't bring us nowhere. Traded back
Mhm.
into it, raped it, violated it, ate its food. That was it. Nothing. Now,
Mhm.
if your eye was sharp, you'd be like, all right, this is an order block. I'm gonna take this order block. Trade back into
Mhm.
this order block, I take it. Okay, cool. Now you create a gap. You're done with that trade. The market gives you all types of setups. You just have to train your eye and trust it to see it.
Okay.
That's it. So, displacement gaps are the gaps that you want to trade. So displacement gaps are the gaps that either take out a swing high, or if we're bearish, it takes out a swing low.
Okay.
All right. So if we trade back into this gap, you get long. If it's a bearish gap, we trade back into that gap, you get short. I don't have many bearish examples to show you because I don't know the last time the market was bearish. Maybe in
Mhm.
October of last year. But from a bullish perspective, because we're in a bull market right now, the displacement gaps are the gaps that you want to trade. So displacement
Gotcha.
gaps are the gaps that take out the highs.
This was price at the top of that red candle.
Right
Yeah,
here,
that's it.
swing high.
The 14, 51.14, I think. Yeah, 51.14 roughly.
So I would buy up from 51.14.
From the open of that red candle, man.
Yeah, right here. So I'll be looking to get, I'll be interested in getting long here. Because not only that, it's because it's another reason to buy too. Because okay. What's this called?
Consolidation.
Consolidation. So what happens when we return back to consolidation?
We explode.
Yeah. See that? That's
Yeah.
it.
Gotcha.
So now this is hindsight. This price action already happened. We can't change it. All we can do is learn from it. So the beauty of this is you get to learn, right? So when you see consolidation, so like this is manipulation right here.
Mhm.
We know the market bullish. We know the market bullish. So this is manipulation. So we consolidate, boom, come out of the consolidation and sell off. I think this is the trade Winston took. You sell off, close beneath the order block. Oh shit, we close beneath the order block. Oh, I'm taking that. And then the very next candle, look what it does. Come back into the order block. Then so that's manipulation. So all we did was trap y'all into this thinking, oh, we about to sell. We trapped y'all. But that's confluence manipulation. I don't want to confuse with too much information, but this consolidation, sell off, you'll think, okay, we about to sell, but in actuality, you think we just went to this daily order block. This is the daily order block right here. Let me draw that line. I think it's 50, 90, 25 or something like that. This is daily order block, this blue line. So that's all we did was come to the order block and just explode to the upside. But you see how like having a higher time frame reason to buy will overrule or override this selling candle is because this is a 1 hour time frame. So the daily supersedes the 1 hour. So in essence, this is the 1 minute chart or the 5 minute chart to the daily. You know what I'm saying? So now it's just like, okay, we hit the order block. Now on a daily time frame, I'm sorry, on a 1 hour time frame, we didn't give you a gap to trade back to the upside or reason to buy to trade back to the upside. So that's why you use your smaller time frames, whether it be 5 minute, 10 minute, 15 minute, whatever you're comfortable with. You use those time frames to gauge your trade to take it in the direction that you want to take it in. Because if you're just looking at the 1 hour, you missed your trade because it didn't give you entry. Unless you want to use this order block again, but you didn't miss your trade if you're just looking at the 1 hour. So now that's why, I try to get, look at the smaller time frames, find those gaps, find those PD arrays, find those order blocks to take to the upside, to the downside, whatever direction you feel like the market is going in, use the smaller time frame. If you see, okay, if you like, all right, this is a daily order block, I'm gonna take this, but you're not gonna take it from a daily perspective. You're gonna take it from a smaller time frame perspective, like the 5 or the 1 hour, whatever you're comfortable with, like I said. But that's it. That's it in a nutshell, man. Liquidity. We're looking for liquidity. That's it. Internal, external. We take internal liquidity, external. We take external liquidity, internal. All right. So if you ever notice how we take out a swing high, which is external. We take that swing high back internal to a gap or order block, and then we take that liquidity back to the next high. That's all it is. It's ping pong, taking liquidity from here to there, here to there, here to there, here to there. Is it? Just paying attention to what it does. So this is gonna be the last thing I see before I stop talking. When you hit liquidity, whether it be internal or external. So let's just say we sweep a swing high and we reverse and we create a fair value gap while we're reversing, right? You take that gap to the downside. Or if we're trading higher, right? And we hit we hit a bearish order block. And off that bearish order block, we create a fair value gap in the opposite direction. We take that fair value gap to the downside and vice versa. Same thing, same rules apply. So take out swing highs, come back into the gap. We take out the external, bring the external internal. Displacement fair value gap. We take this internal, external. That's it. That's all the market does. We take internal liquidity, external, we take external liquidity, internal. You just have to train your eye to be able to see it. You do it, it happens on high time frames, it happens on the daily, it happens on the weekly. So even on the weekly, it happens, but it don't happen that often because once you catch a weekly move, you golden, right? You golden. So even here, You got internal liquidity, which is your order block. Left a gap here. Let me show you. Let me show you. Let me draw this gap out. That's a weekly gap, right? We left that there. But this is displacement gap, right? Once we displace above this was the swing high, of course. Displace above that, boom. Because this is a weekly time frame, bro. So now, so you was trying to, I remember this trade like it was yesterday. I'll never forget this shit because I lost a lot of money on this trade. Oh yeah. So I was trying to sell this order block. This is a bearish order block. I said, oh, I'm about to sell this bitch. I'm selling it. I'm selling it. And as you can see, I didn't win that trade. I lost. So when shit like this happens, that just lets you know the market is heading to the other side. So we closed above that order block. We use that order block as support. So you stepped on me twice. You hit me with the bus. You backed up and rolled over me, and then kept going. But that's not what we hear. Internal liquidity, external. You got your swing up here. I'm doing a lot of drawing. You got your swing high right here. Let's see. Got your swing high right here. I'm taking all that liquidity out of the market. All of it. So internal, external, external. And then ultimately the all-time high, which was this at one point. So this is liquidity. Y'all see that?
Yeah.
Yes, sir.
Weekly. This is a weekly, like, you know, we're not swing trading futures. Well, at least not yet. But, you know, so this is the move. You guys ultimately see this is the move that started the sell-off where it really is. This is the move that started the sell-off. Right? This leg, then you got this leg, then you got this leg. All that shit got taken out. All of it got taken out. This swing high got taken out. This swing high got taken out. This swing high got taken out. So now, you know, now it's, you know, like we just find out what happens on the next episode of Dragon Ball Z. Because, like everybody knows, we don't have no data to the left. We just in a pool of bits up here. So until the market returns back into the range to give us some trade setups, you know, we flying. And that's it. But eventually the market is going to create another swing high, and we're going to trade back down. And then this is, you know, from a weekly standpoint, whenever we start selling, this will be my price target. This swing low. Because this is going to be your first leg to the downside. This is going to be your first leg. So this is the leg at 4,700. This is the leg that took out the swing high. This is the all-time high at one point. This is the leg that took it out. So we got to take this leg out once we start selling. The leg that took out the swing high, we got to take that leg out. But that's neither here nor there. But back to what we were saying, because I don't want to get too far with the mark. I think I've been talking too much. But that's it, man. That's all I got. Internal to external, external to internal liquidity. That's it. Anybody got any questions, comments, or concerns?
Yeah, we appreciate it, bro.
Thank you, brother.
No. All right. We going to the hood that they win?
Yeah, I'm a crossover.
Excuse
But
me,
then,
Mr. Hayes.
your people still in there?
I think so.
Mr. Hayes, when
Okay.
you uploading this one too?
Yeah, I gotta see because right now, I had I had to start recording on my phone. So I had to say I pull it off the phone and put it on YouTube. But
Gotcha.
I'll be working to do that once we get off.
Yeah, it's all good. I'm subscribed to it. I get the notification when you upload it.
Okay. The other part I want everybody on here to also take into consideration about us finding a spot to sell. We got Quiet Witching about to come up, right, Mike?
Yes, sir.
Our new contract should be coming out probably at the end of this week.
Yep.
So that'll be people having to relieve their positions to get into the new contracts. The 624s, this for the people that's trading.
Yeah.
So that's a sale probability, you know what I'm saying? That could get us to start selling, see some correction or pullback. And then also I was looking at the high that we took out at I'm be calling out SPY numbers, but the high we took out at 479, 10% going above that old all-time high would be like 520 to 523. So that's kind of like the number I'm looking at for us to probably be aiming for. And when I get in the hood, I'll show y'all that.
It would make you the host, Brody.
Yeah. Well, no, Mike. No, don't do that. Don't do that. I got two of them in here. Hold on.
Yes, sir. It's gonna be a good week of trading, man. It's gonna be a great week of trading. Let's see.
You can hear me now, Mike?
Yeah. Yeah, I hear
Can
you.
y'all hear me?
Yeah.
Yo.
Yep.
Oh, you can hear me?
Yeah.
Do it now, Mike.
All right, there you go.
Oh. We probably could pull it up on. Y'all can see this chart? You can see the chart?
Yes, sir.
That's the SPY. So do y'all know about, I know the other guys in there, y'all know about extension, the Fibonacci extension? No. Let me move this one right quick. All right, this is a monthly time frame that we're looking at right now. I'm using the extension since we don't have any data to the left. I'm using the extension to kind of give me some possible prices since we broke that all-time high. We didn't got no data on the left. So usually the golden area is from 61.80 right up here to about what is it, 38.20. Well, we traded through that, so my next target is the 100% mark, which is 521, and that's on a monthly time frame. The reason I'm liking it even more is if we go to do this. Let's mark that number.
Great.
check out our website, www.racistfortv.com. Thanks for
A monthly.
Yeah.
So, I'll take that off. Remember, that's 100% on a monthly.
Get instantly approved for up to $3,000.
The weekly.
If you want in store or online, up to $3,000, all without using credit. Go on, get happy instantly.
And if you go to the weekly and do the same extension on this one.
It's $7 going. You pay for that. Racist warning.
Y'all see that?
Yes, sir.
So the weekly and the monthly have us going to the same area. I marked the monthly and then I took it off. Then the last run we went on with this minor pullback on the weekly is all showing 520. So that's gonna be a number that I'm looking at to I guess as a up target. I don't want to say sell because the market has been so bullish, but possible turnaround, or if I'm playing, for instance, I'm looking to buy 509 just because it broke this level. And on the monthly, I think it was somewhere at like 500. I'll go back on that. But it broke this Fibonacci level. So the next one we have is the 78 on this one and 100% on the monthly. It's like 520. So my entry to go to the upside is going to be like 510, 509. And then it's almost, if y'all think about that, we try to compare the numbers to the ES. But Mike's already saying they have a pullback on the ES, that gap he was talking about on the hourly.
Mm-hmm.
I'm hoping it lines up with the SPY also. But that's two. They numbers are not the same, but the movement is. So that's buyers trading both of them. That's just a bet. Well, me, because he doesn't. That's
the out the hood, baby.
Yeah, that's just two things. So just showing how both of them definitely are showing more upside. And let's say if I'm trading the futures, once I see 520 hit on here, wherever that level is on my futures chart, my ES, I'm looking to sell also, be out of that upside trade that I took. Like I said, I'm trying to get in and buy more and then just be out of the way at 520. I don't know if it's going to sell there. How if it does sell, I don't know how much it's going to sell. Let me say that, because you're still in a bullish market. But I'll be getting a contract for 520 now that it already beat this 510 mark.
And this on the weekly, right? That we looking at right now.
This is the weekly, and the Fibonacci I just did. The white line is the monthly, which I definitely think we are operating off of, because like Mike said, the big fish, they operate on monthlies. They operate on percentages. So the monthly and the weekly is lining up for this 520 number. So This is a weekly chart.
And when you say monthly, right, but the monthly, you talking about for this new month that we in now? Because the month just ended, correct?
The month just ended. I'm talking about the fifth. So we using the extension to kind of give us a probability. Like there's nothing to the left to tell us, oh, we going to this number, that number. That's why most people, I want to say this is kind of like the only thing you can use to get you some price targets once the all-time high is beat. So
Right.
I did it on the weekly and I did it on the monthly. This number is the only one that lines up for both of them. So like I said, I don't know if it's going to sell there, but I would buy it to that number. I'm not going to say I'm getting a put at 520 just because the market running. You get what I'm saying? You might get a red candle, it might just blow straight through that one too. And then now we go to the next, hold on. Then you go to 535, you know what I'm saying? And then so on and so forth, whatever it is. But just looking at this weekly setup, look at how it's reacting at each one of these numbers that the extension provided for us. The 38%, it broke it, came back, tested it, great. It went to the 50, checked off on it twice, broke it. You get what I'm saying? Then it stopped at 61. Got a little pullback, then come all the way down to 50, and then it ran again. So it's been hitting on this weekly, it's been hitting everyone and kind of checking off. So I would be a fool not to pay attention to this one. You get what I'm saying? It's hitting every level and you're getting some kind of resistance to it. That's letting me know that I'm not the only one using this extension. It's all like we talk about like Colts. I trade gaps. There's millions of people trading gaps. Mike's doing order blocks. Millions of people doing order blocks. It's just who I know the extension calls it, they're here because they're reacting to each one. They had somebody selling the 50%. You know what I'm saying? It broke. There's somebody selling 61. That's why it took another week for it to break. So I'm getting the reaction I want to this. When those order blocks hit that Mike talk about, they're gonna get some type of reaction out of it. And if you're in the ES, that reaction can be the $2,000, $3,000, $1,000 reaction that you want. You know what I'm saying? So that's because that's what they're trading. You got everything else, the flying cradles and the RSI people. You have different ways of looking at the market, and we all could be right at the same time.
I like to treat the lamb chop sing along.
The tenderloin,
Either that, yeah.
So right now,
Either that or big back McGriff too. I like the big back McGriff. But go ahead.
I think, and then right now, the reason the extensions are so great is because on a bigger time frame, there is nothing to the left to go off of. All you really have up here is your extensions on how far this thing can run. So now everybody, this is the only thing that's on TV right now. Put it like that. This is it. This all you can really get a prediction off of or a probability off of is the extensions. Unless somebody else have another indicator, this is it. Y'all cool with that?
Yep.
So my entry for this trade is gonna be for me. And then this is the crazy part. Ball, you on here?
Yeah.
Why did you choose 520? If you don't mind me asking.
I was looking at the same thing with your extension, looking at the extension, seeing where we could go. I was kind of mapping it out on a monthly time frame, and I also seen that we couldn't break below 503 to go to 495. So my next line up after 515 was 520, and we almost hit that on Friday.
Okay.
And it was dumb cheap. It was like 22 cents or 27 cents or something like that.
Okay.
So
And
I took the 495 for Friday, and I took the 520 took the 495 for Friday just passed,
okay.
and the 520 for Friday coming up.
Okay. All right. All right. So we both using the same thing. I was trying to make sure it wasn't about I know you like looking at the premiums and stuff.
Yeah.
Yeah. That's what I got. I'm doing that, and then on the ES, those gaps that Mike pointed out earlier, I'm gonna be taking advantage of one of those and just keeping this big picture in perspective that I'm selling short term and I'll buy, and I mean short term is like maybe the hour, the 10 minute. Then overall, those let's say I'm taking one contract down and two contracts up. So my bias is just buy until we hit this number, and then I'll see what the reaction is, and we'll go from there.
And the market gotta sell off about 150 for me to be like, all right, I'm ready.
Wait, which is it?
That bitch gotta sell off like 150 for me to be like, all right, come on, let's roll.
And just to keep y'all informed, I know we have non-farm payrolls this week, and we have POW up for 2 days. And I think we have one more red folder this week as well. So
I'm looking at it right now, Ma.
okay.
I'm looking at it right now. We got unemployment Thursday.
Oh,
We got Monday. So tomorrow we don't have anything. Tuesday we got some news at 9, ISM services. Wednesday we got FOMC Wednesday. No, that's not FOMC. We got Powell testifying at 9 a.m. That might be it. Okay, we got non-farm payroll. Oh shit, that's gonna be volatile. Yep. So Wednesday we got red folders Wednesday, we got red folders Thursday, and we got red folders Friday. So that might be the days I trade: Wednesday, Thursday, Friday. Okay, it's accident.
oh, Mike.
Yo.
And at 10%, if we go to 520, that 10% get us down here at your start.
That's the same thing I was saying.
That 10% correction get us down to
4,700.
468.
4,700, dog, bro.
I'm just saying
that. I'm not
I'm
missing
just
that,
saying
bro.
that'll be weird. We go to 520 and then we get a 10% correction.
And yeah,
and you're right back to where we took off from.
Yes, sir.
That's a few things. That's three for me. I got the monthly extension, the weekly extension, and then a 10% pullback off of that new high would have us right back where we feel like we do need to go. 470, 467 down here. If y'all see this order block, 472 for the people that's doing the order block. So myself included.
So even looking at this chart, even looking at your chart, you see that order block that you got your cursor on, and you see the move that came off of that order block. So that, bro, that's some institutions, bro. That's when they enter the market. So they enter the market and buy it up. They buy it all the way up. And then once they hit the price that they wanted to hit, they sell it, and then the sell-off be violent and quick.
I like it.
Yeah. But yeah, that's it, bro. I mean,
that's the overall. A sell off a little bit. That $3 is like $30 on $3 on the SPY is like $30 in the ES. So y'all go match those numbers up. And then I'm looking for that run, that not last run, let's see if we're gonna go there. If we close below it, then so be it.
I gotta believe though, man. I gotta believe this the last leg, bro. This got to be the last leg here.
Yeah, I keep knocking them down though. That's why I said I'm more willing to buy up than to just jumping away and sell, because it's just we looked at the extreme greed index. I mean the fear greed index, extreme greed. The RSI on some of these things is just like crazy, but it had enough to break this last
If I'm being honest, bro, I would rather the market is hurry up and go hit this 520 than sell. Like by this being the beginning of the month, go hit that shit and just sell.
Because that still give you a higher high on the monthly candle.
Yeah, that's it. Yep. That'd be a high.
But even so, these orange marks, that's the other thing too. These orange, these are monthly gaps. They need to come take this one out. What Mike was saying, internal. You got the external. Come get this internal liquidity.
Liquidity.
That's it, bro.
So we always, me and him, look at different things, but it all lines up. So that's what I got, brother. What I got for the people. Y'all have any other stocks y'all want to look at? Anybody?
AMD.
AMD, I got one for you, Ball. I got one for you, bro.
Hey, dude, what you done?
There goes. That's beautiful. Off the all-time high. That's smart. You trying to see how far this one gonna go? Put something on.
Let's
put something on. I mean, we here.
Just was curious, seeing how Nvidia been going crazy. This like a little brother, little sister to Nvidia.
Bro, all those semiconductor chip stocks, they going crazy. All of them, bro. NVIDIA, AMD, Qualcomm, ASML,
Intel.
Yeah, all of them, bro. All of them. SMCI.
I got one for y'all too.
What's up?
I got one for y'all too.
I see.
Got one for y'all too.
Really, bro, everything been Microsoft. A lot of shit been going on, bro.
Except for Apple. You know what we'll be at if Apple ever joined this race?
Yeah, Apple hasn't been doing.
Well, that's the market balance. When everything else start to cool off, that's when Apple gonna do what it do. Everybody can't
fall to shit. Yeah. Apple
everybody
was
can't
right
do their
now,
thing.
bro,
Hey,
we'll
chill
probably
out.
be at fucking 600 or something, dog. I ain't gonna lie to y'all.
Say that again?
Apple's been getting cooked. I think Apple at like 170 or something, bro.
Yeah, I just wanted to see how everything, how AMD look in relation. Like I said, I know Nvidia and shit been going off, but I would like to see how the way y'all been going over the SPY and the ES, just seeing how all these other stocks that's been running along with them, how they look in relation to turning around.
Pullback is imminent. Is imminent, bro. It's just
Facts.
It's just by me we're so by me not being in the hood as much, bro. I don't really be charting the stocks like I chart Tesla though, but other than that, bro, I just be Looking at them when y'all look at them. Prime example of what I'm talking about, bro. You see, now check this out. Now check this out. I was just talking about this, right? So if you have a displacement gap, see this gap that we just created on Tesla, that's a displacement gap. Close below the swing low. Took the swing low out, right? And at the top of that gap, you got a fucking order block. So you got a displacement gap and an order block. Sell. Sell. And you take, what time frame is it? This a monthly?
It's a monthly.
Ooh, hold up, bro. Let me write my notes.
Hold up, dude. Just lay down on this side, dude. Yeah, get over here on this side of my leg.
Yes, indeed.
There you
I
go.
think it's over once you probably fill this gap, Mike,
That's it.
at 207, and then rain down.
It's gonna Tesla. So if you want to buy Tesla shares, it's gonna give you another buying opportunity in a second. I think anything under $200 for Tesla is golden.
Yeah.
Okay, I walked out. I'm glad y'all touching on this. I was just talking to names not to be mentioned that it looks like Tesla shares are buying right now.
Wait, what's
you
the last
messed
thing
it,
you
Kyle.
said, Mark?
Names not be mentioned.
No,
man.
no, not I caught that part. What's the other part? They started laughing.
No, I'm saying it looked like it might be a buy right now. I think if we can
No, Ma.
no at
No.
at 200.
No, look, check it out. Go back, Mark. Oh, he about to go to something else.
No, go ahead.
So I'm saying, go back to the monthly. Go back to the monthly chart. So look, Mark. So on look. See, we just
Never
created
mind.
a displacement gap.
Yeah, I see
Top
something
of that
different.
gap, we got an order block. See what I'm saying? So you could sell it. You could sell it. You could sell it down to like 180 or lower. You know what I'm saying? But
this on a month. This a
it's a
monthly, right?
So
So you got to get this with some time.
It could run because you want your
But
entry.
Ben, so this is the thing. So like how you said the monthly, the thing about this is you definitely want to get time on it, but it's kind of the upside of it. If it's gonna do it, it's kind of tapped out. Your downside, what you say the downside is, Mark? I mean,
180.
180.
Yeah, or lower.
And your upside is 207. So you $5 off your upside and 20 something dollars off your downside. So it's still like the perfect entry if you're thinking about selling it.
It could really go fill that. It could really run and go fill that gap, bro. And then
the whole joint.
Yeah, it could run and go fill it. And then once
that's what I was about to ask. Do you think it's gonna bounce back up to that line?
So once it fills, that's it.
No, you're diagonal and go back up and test. Yeah.
So you got 1, 2, 3, 4,
actually,
5, 6 touches.
Yeah, actually, this is where I would be selling from because when you're doing this, when I'm messing with the trend, I'm looking for a level to break within it. You get what I'm saying? So to me, it broke this level. Now I'm looking for it to just sell off and go to, I got 163.
Yeah, I was just about to ask you, can you switch it to a weekly?
So now within this, you like, 168. I think Mike's going off of the bottom right here, but there's obviously people buying that. Right yonder. Are you looking to take out this, come test this swing low right here, Mike? At 175. The price somewhere within here. Yeah, that's what I'm thinking. But whichever one you do, I agree again, Ben. Get you some time on it.
Right, well, nah, I ain't looking to really touch it. I'm just
I'm just speaking to
trying to get information
everybody
out there,
that's
trying to
listening
learn
to
out
it.
there, folks. Right.
We're looking at weekly numbers right now, so you definitely want to get you
Mhm.
1 week, 2 week.
Yeah, I'm stalking my prey right now, bro. I'm waiting on the reversal of the market. I think that's when I'm a pour into to some contracts. But right now I'm just playing everything close. Cause I feel like we right there. It gotta be here. It gotta be soon, bro. Sooner rather than later, I should say. You can't just keep going off, dog. And when it go, it's gonna go. And if you ain't rolled it up by now, you might well just chill and wait for it to come down.
Yeah, long term, definitely. But you think about nobody get scared. Everybody calm down.
Mm.
You thought the ride was over. You get somebody like this who's clearly trying to take over the market. This is crazy. I've
That's a
been called,
unicorn.
yeah, I've been calling enough on this one for a minute, but now, and that's kind of why I said
Hey,
start getting
man,
stuff.
pull up SMCI, bro. After you look at this.
I got one for y'all. I got it in, and I'm gonna cut this off after I pull it up. This is nothing.
SMCI.
Hold on. Mm-hmm.
Ridiculous.
That bill was $70 2 years ago.
So the first of the month it was 200.
Wake up, wake up, wake up. So just imagine
Never
you
mind.
let me
I
buy some
digress.
600.
Mine ain't that good.
Let me buy some 500 calls that expire in June. Oh man. Anyway, what's the one you got, Win?
Look at this though, Mike.
What you got, bro? That's your trade, huh? That's your trade. Let me get them 1100s.
Come put some candles on that.
Oh, but look, man, I'm lying, bro. That bitch not. Hold up, I'm about to show you. Oh, I'm about to tell you. Hold up. But I think that bitch ran more. That bitch, so that's not the price. Because it's in the S&P now. Yeah, it's at 1,000. It's at 1,019 right now.
Oh, oh, past this.
Yep. Ooh.
Now I it up here. Look, you see it up top?
Yeah, it's up there. Yep.
That was after market when they added it.
Yep.
Yep.
Amazing.
That bit probably gonna open up at 1100 tomorrow.
Hmm?
The MSTR. Oh, that's that Bitcoin shit, bro. Bitcoin running, bro.
Taking with that coin too. Mama wants
The all-time high for this one was 13.
The Bitcoin running, bro. That's
Hold up. Hold up, dude. I got you.
Crazy, bro.
Hmm.
Bitcoin at right now. The Bitcoin at 62,000. It's up $700 a day already. Phew. I'm about to buy
It's going
something.
free.
That's crazy.
Jeez.
Internal liquidity,
Oh, hold
external.
on, that bill was at the same time. Oh, all right. Yeah, it was supposed to. All right. $100 in December. $100 in December, bro.
And we just in March, huh?
Mm-hmm.
Oh, sweet.
But see, I'm not the type of nigga that pay attention to Bitcoin and the Bitcoin
Oh no,
stocks.
that was December 2023. I'm sorry, y'all. Don't mind me.
But this in 2024.
2022. I'm sorry.
Oh, I'm about to say.
But they had this year. They had 2023 right here. Damn. But let me keep it a buck. I ain't taking none of these. Spy and possibly Tesla.
w.gracie'scornertv.com. Thanks again for the support.
All right, y'all. Have a good one. I love you, Supreme. I know you're on there, bro. I'm going, y'all.
It's all good.
All right.